Coming up, what to do with your cash. The short-term outlook on stocks may not be great. Bonds don't look much better. So where do you turn? This is Regions Wealth Insights. Welcome to Regions Wealth Insights. I'm Jeremy King. Today we're joined by Brian Sullivan, President and Chief Investment Officer with Regions Investment Management. Brian, thank you so much for joining us.
Thank you for having me.
I've been reading and listening to you and others about market forecasts, and it seems like a lot of investors are wondering simply what's going on right now. Can you begin with providing for us your overall market recap?
Sure, Jeremy. Investors have a right to be confused at this time. Things are very different than they have been in the past. We're turning to the bond market. We're at very low levels of interest rates. We think that the Federal Reserve will raise rates this year, and when they do, those bond prices are likely to fall as yields go up. Bond investors are going to see losses in their portfolios, not necessarily realized losses, and they will get their money back when those bonds mature. But for the time being, they'll have declines in the values. Then you turn to stocks, and stocks don't look much better. We have an outlook that says we should get maybe minimal returns from stocks, but that the risk is up. This is the seventh year of this bull market, which started back in 2009, and we're up 200%. So we've tripled our money during that period of time. But that is an old bull market, one that is 7 years old. So one concern is how long will this bull market last? Another is that we typically have a correction in the market of at least 10% on average every 450 days. And that hasn't happened in over 1,000 days since June of 12. So we're well overdue for a correction. So I think it makes investors nervous. There are some places to invest. There's still real estate and some foreign markets that look attractive, but there aren't enough of those opportunities to make a diversified portfolio.
Offhand, at least, at first glance, that outlook can be a little bit overwhelming for investors. So how are you working with them right now?
Well, our clients, fortunately, typically have very long-term goals. And so when you stretch out the time frame, things get somewhat easier. The short-term outlook becomes less important, the long-term outlook becomes more important, and we're pretty optimistic about stocks in the long run. And when bond yields rise, you get more income from those in the future. So both those markets will improve when you use a long-term outlook.
If my portfolio is largely cash right now, should I wait until after a correction before I invest?
Well, that's a good question, Jeremy. And rather than talk about your portfolio, because I would need to know a lot more about your portfolio before I could advise you, let me make a hypothetical. Let's say you won $20 million in the lottery after taxes.
All right, I like that so far.
And you have a 40 or 50 year lifespan expected. And further, we'll assume that you expect to need 10 million of the 20 million for your expenditures during your lifespan. Well, in that portfolio, that $10 million, to us, it's important that you balance both the income need that you have that's current and the growth potential that you're going to need because you're going to have this money grow over 40 or 50 years. And so a large part of the portfolio would be in stocks, probably 60% in stocks. And then the bulk of the remainder would be in bonds with some cash for your immediate income needs. That would help to balance the whole portfolio for what you would expect to need over time. Now, if the market does correct, then you maybe can put a little more money into stocks from the cash portfolio or even from the bond portfolio. But we would get busy and get that portfolio largely invested immediately.
So in this hypothetical, you're talking about 20 million, hypothetically. What about the other 10 million?
Well, that's right. That money is for the children or the grandchildren, and because you're not going to use it during your lifespan. Now think about how long they've got. They've got a 70 or 80 year lifespan, the children, and the grandchildren 100 or more years until their deaths. So their life is really, really long, and they don't have any income needs immediately. Your portfolio would be taking care of their needs early on, and so we have no income needs, no liquidity needs, we only have growth needs. That portfolio, I believe, would be entirely invested in what you might consider to be aggressive growth assets, stocks, foreign stocks, private equity, real estate. These are the investments that are expected to give a high return over a longer period of time, but don't necessarily provide great liquidity.
We're talking about such a long-term time frame here. What about other investors who may have only 10 to 20 years before they need to see the fruits of these investments, so to speak?
So now you're a 70-year-old lottery winner.
Okay.
Okay. That is different because over a 10-year period, we have had markets that are down. And so there's not a historic precedent of always having a positive return. That's an issue. So here you're going to have to minimize the amount of these riskier, higher returning assets to something like 30 or 40%. Then the bulk of the portfolio would be in bonds to provide stability and income, and a little bit in cash, maybe 1 or 2 years worth of income needs would be invested in cash to provide that liquidity that you need going forward. Now, if the market does correct, maybe we can get a little more aggressive with this portfolio and push it from the 30 to 40% in equity-like investments up to 40 to 50%, giving a better growth outlook after the market has come down. Do you buy lottery tickets, Jeremy?
Not really, but maybe I should start.
Yeah, me too.
All right, thank you so much, Brian. Appreciate your time.
Thank you, Jeremy.
And we thank you for watching. We have more information online to help you and your family build, protect, and preserve your wealth. Just go to regions.com/wealth. Or if you'd like to talk about this or other investment topics related to your personal situation in person, just give us a call at 1-800-826-6933. And we'll see you here soon for another edition of Regions Wealth Insights.